Hi, this is Jason Sen for ntmarkets.com. Today, just want to show you the longer term chart for the Nikkei futures. This goes back to 2007, so we've got the whole drop from there through to 2008 when pretty much all global stock markets had a nice big collapse. So you can see from this chart that we've now managed to gradually rally up. Well, most of the rally's actually been over the last few months. We've had about, I think, 18 or 19 weeks of continual gains, which has taken us up to the 12,575, 50% retracement target. This should act as very strong resistance, really. You can see that the weekly stochastics here in the bottom right hand corner are very, very overbought. We've got a weekly, let me just open this up a little bit. We've got a weekly reversal, which means we have made a new high the week before last but closed lower than the previous week. That's often a very early warning sign of the end of a trend. You couple that with the fact that we've hit the 50% Fibonacci retracement and the fact that the weekly stochastics are very overbought, that is telling me that the rally is now over. Have a look on the daily chart. As you see, we've just gone sideways for the last few days, really, almost a week. Just backing up the theory that the momentum has run out. Daily stochastics have now turned negative, and I think there is a chance we could start to see this market sell off now. 12,250, that's our first support level, and that's been holding the last few days. We've held just above there at 12,270. So watch for a break below 12,250. That should take us down to about the 12,000 level. We'll probably hold there for a little bit. But you can see these Fibonacci retracement targets. 11,840 would be the one below that, and then we've got 11,600 and 11,700, 11,650, which is probably our ultimate target. I would expect to see a good bounce off that level initially. Who knows? Maybe even back up to the 12,600 area. So that's just a little look at the Nikkei. While we're looking at that market, we might as well look at the yen. The Nikkei's had a good run on the back of yen weakness. Again, this ties in with what we're seeing with the Nikkei. We had a good run up that came to a halt beginning of March, middle of March. We started turning lower a little bit. If I just highlight this red uptrend line here, you can see we've had an uptrend since the middle of November, and we're just starting to dip below that now. So again, a bit of yen strength would potentially push that Nikkei lower. So these markets are tying in quite nicely together. Target on the downside for the yen, for the dollar versus the yen, I should say. 92.09 is our first fib retracement target, so I think that's where we're probably headed. Thanks very much. This is Jason Sen for ntmarkets.com.